How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options trading program. Let's get into market Mondays for 4/19/2021. I think 420 is right around the corner for people that get into that. So what we do on market Mondays is we try to give you a really good understanding of a market-based conversation. And really what we endeavor to do is try to get you to understand how you can benefit from an understanding of the markets. And we try to do it in a really, really concise form. We try not to keep you here for a very long amount of time because we understand that you're a busy person. You got things that you want to get into. Another thing we try to do is we try to talk about things in a very, very plain and common tongue. And because we really desire to sound like the kind of people in your normal community. And so to get you to really understand that you don't have to be one of the people on CNN, you don't have to wear a suit, you don't have to get a PhD in finance or economics to really understand how the markets can be beneficial to you. So let's go ahead and get into it. So today, right, the market was pretty much red the majority of the day. I think, in fact, it opened and closed red. So we saw the S&P 500 close down around 0.53, the Dow closed down around 0.36, and the NASDAQ closed around 0.98, right? We saw the 10-year Treasury advance to 1.6. West Texas Intermediate crude rose to $63 a barrel. We talked about before, we believe oils continue to go up. And we got a lot of really big earnings this week. So let's see how it plays out. It surprised me personally that the market opened red today. I kind of believed that it was going to continue to push green in anticipation of earnings. But what we may have seen is that a little bit of a profit taken before earnings, and then we get ready to roll into earnings the rest of this week. We're getting ready to go into a really, really, really strong earnings week. So we talked about that on the weekend stock market talk. Want to see how market opens tomorrow, how things continue to play up. And if we get really, really good earnings on Tuesday, will that create like a really positive green trend as we go into the rest of the week? We're seeing with the 10-year Treasury, it's been pretty much staying around 1.6, 1.7. People have become very desensitized to it. So we think we probably got to get, 1.8, 1.9 for people to become kind of scared. And we're seeing that with the oil continuing to go up per barrel. We anticipate probably maybe close to $70, $80 by the end of the summer. That's not investment advice. However, that's our own prediction. We think energy is going to continue to go up. So let's roll into the rest of this week and kind of see how the week plays out. We saw Monday was red. Mondays sometimes don't start off great. Things may look better as the week goes on because, like we said before, we want to see those earnings come out because we're really, really enthusiastic about that. Now let's go into the jump outs. So now we saw Peloton. We got news over the weekend that a report was issued out that Peloton treadmills can be dangerous to children. That's not a surprise because treadmills can be dangerous to children. Treadmills are very dangerous to unsupervised children, right? It is what it is, especially young unsupervised children. So it wasn't a surprise that Peloton treadmills were found to be dangerous to young unsupervised children. But however, because this particular report came out, it kind of put Peloton at a little bit of risk at its particular price. So we saw a little bit of selling. They lost around 7% on the day. And we kind of want to observe them because they're getting ready to go into earnings in a few weeks. And I want to kind of understand, can they really support that, around $100 price point as we get ready to go into earnings and more of the economy starts to open up. So I think this wasn't a great scenario for them to be in, but they have enough time to try to get a little bit of a rebound and then maybe potentially try to put out some news on earnings that can, either stabilize their share price or get their share price to move back up. Tesla, another scenario, came out over the weekend that we had two people in the car in Tesla, and very, very unfortunately, they passed away as a result of the car catching on fire and then subsequent fires from the batteries. I didn't know those batteries could catch fire, but I'm not an expert in battery technology, so I wouldn't know that. So what we found is that the Tesla caught on fire, the batteries continued to burn. So there was a really, really strong effort by fire department to make sure that that particular car got extinguished properly. And as a result, I think throughout that whole process, we don't necessarily know the details. Two people that were inside the car, they were not able to make it out alive. So very, very unfortunately, they passed away inside this car. And so we think some of that negative news caused a sell off. And we saw Tesla, we see when they came out early in the morning, right before 10 o'clock, they sold off pretty hard and they kind of recovered as the day went on. So we want to continue to see if that has any effect on them as they get ready to go into earnings, which I believe is next week, right? So it wasn't a good play for Tesla, and it's never a good play when two people lose their life or anybody loses their life in a roadside incident. But we got to look at this from a market-based perspective and try to ask ourselves, how will that event or people's perception of the event move their share price? Now let's look at Cinemark. So I think it was JP came out and gave Cinemark an upgrade as a recovery play. So we saw them jump up around 3% for the day. And I don't know why people are so bullish on AMC, but not bullish on them. To me, their balance sheet looks a lot better than AMC, but it is what it is. And so we saw that they moved up. They sold off a little bit in the aftermarket, but I would look at their their 52-week high and try to find out how far they are from that, and then try to kind of understand where do I think they can move as the economy starts to recover more and more, and as people start to get out. And I really also want to see what are the big releases that are going to actually go to theater that we have upcoming, as opposed to going into direct to consumer, right? So straight to the on-demand streaming services. And then also would look for, as we get later into the year, what movies are scheduled for Christmas releases, because normally Christmas is a really big time for the movie releases. What movies are scheduled for Christmas releases that are also going to be in the actual theater, as opposed to going straight to consumer, because the theater now has a different marketplace they're operating in. They're now fighting with an on-demand release. See, historically, movie hit theater first, then it went to what we call the secondary market. So that was the cable networks, the HBO Cinemax type networks, and then, the DVD networks, right? For people that's still old enough to remember the DVD games. Now they're dealing with the fact that they're competing to have the movie either go to the theater or go to the on-demand, because it used to be that the theater would get like a month to run the movie, and then it would start going to those secondary networks, right? So if you was one of the first line theaters like an AMC or a Cinemark, you would get the movie first. You would be able to run it for like a month, and then it would start moving to the secondary, like the DVD market. And then it would also hit like the secondary theaters. Like where I'm from, we had like a dollar theater, right? So it hit the $1.50 theaters. They would get a run at it while it was still maybe in what I would call the secondary market. So now the movie theaters now got to try to figure out, how do we compete with the fact that some of these releases are going to go straight to the consumer through like an on-demand streaming services? And then what is going to be our value proposition to a production company or even maybe a distributor, right? Or how we can appeal to them that they should bring their movie to us. And this new environment is going to also put a lot of pressure on distributors, who are kind of the middleman between a production house and the theaters. And that's not including the distributors that also finance movies. So I don't want to get into this a movie conversation, because I got a really deep background in independent film, so I could talk about this for hours. But we want to understand that this whole marketplace has changed, and you want to kind of project long term, let's say over the next 365 days, where do we think these prices are going to go based on the changes in the market? Now, what we're going to talk about is the topic of the day, right? So let's talk about event-based trade. So this was something that I saw on Bloomberg, I want to say a few minutes before I even made this particular broadcast. So in Peru, which is a country, I want to say in South America. I don't think it's in Central America. I believe it's in South America, but I know it is south of the United States. They're getting ready to go into an election in a few months. So they've been, running the election. So you got two candidates. One is a guy who's supposedly, we're going to talk about this, who supposedly is more left leaning, and then another candidate who's a woman, right, who's supposedly more right leaning. So what happened is they did a poll in which the result of the poll, we don't know how many people got actually polled and how the poll was surveyed, right? So what was the process of selecting the people? They said that the leftist leaning candidate led the race. So then what happened is that the bond failed, right, as a result of that information. So what a lot of people believe is that this leftist leaning candidate is going to be bad for the economy. They probably may believe he's going to nationalize certain businesses, yada, yada, yada. The same old tropes that they roll out anytime they label a candidate a leftist. OK, so what we're talking about is event-based trades. So what I want you to do is start separating yourself from the mainstream narrative, because if you read this article on Bloomberg, there is no hysteria about socialists getting ready to come into office. This is how the market reacted to information. So now that you see how the market reacted to information, the question you want to ask yourself is that, how can I potentially profit from the reaction of the market to the information? So it doesn't matter who wins. One, I don't live in Peru. Peru's not a national player on the world stage. Peru, from my understanding, does not produce a product that is essential to my daily life in America. Do I want Peruvians to live a good life? Yes, I want all humans to live a good life. But what goes on in Peru 9 times out of 10 will not affect my day-to-day activity where I live at. So I'm not emotionally caught up into the Peruvian election, regardless of who gets elected. If the Peruvian people decide that they want Peter Pan to be their president, that's their decision. There's something they got to live with. I don't have anything to do with me. So as a person that is really into the markets, I want you to separate the emotional anxiety that a lot of people will try to create in you, that we have a socialist coming into office, yada, 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 right? And understand that the market is reacting to this because of how they believe that this particular person may potentially govern, right? That's their reaction. How can you benefit from it? So what we're going to talk about is event-based trades. So here's the two candidates. So the guy, Pedro Castillo, is supposed to be the left-leaning guy. This chick, Fujimori, is supposed to be more the right-leaning person. So she says, and these are really narratives. And from my standpoint is that the establishment of capital already has a relationship with Miss Fujimori and her family because her father was at one time the president. They don't have that relationship with Castillo and his group. So what I think is what is causing things is uncertainty. The market does not like uncertainty. And then what they've done is, in any duopoly, you got to label people opposites. That's how duopolies work. So one got to be A, one got to be B, and the farther away from the middle you can make both of them, the stronger the duopoly works. That's how duopolies work from a psychological standpoint. You don't want two choices that are similar. You want two choices that you believe in opposition to each other. That's how duopolies work. So we create the duopoly. We make both people in opposition to each other. One person is supposed to be on the right. One person is supposed to be on the left. And then that's how we polarize the public to get them to make a choice. This is classic duopoly politics. OK, so we got to understand is that it's not necessarily that Mr. Castillo is a leftist. It's the fact that the people that are already established from a capital standpoint don't have a relationship with him and his people. Therefore, there's uncertainty. And we know that the market does not like uncertainty. The market would rather know somebody is going to do something than they can plan around that as far as being uncertain. We know Miss Fujimori, if she gets into office, she's going to let capital do what they want to do as long as she and her group becomes wealthy. We know that. So it's like knowing somebody's going to do something. So you may know that if I do this, this is what this person's going to do. So there's no uncertainty. Whether you agree with what the person does or not, there's no uncertainty about what the person's going to do. With Castillo, there's uncertainty. Why? Because him and his group, from what our understanding, have never been in a position of power. Miss Fujimori, she comes from these scenarios because her father was president of the country at one time. And we understood how he got down, and you probably would want to go research that. OK, so the question is the market responding to the uncertainty? How do we make money on that? So here's something that we can look into. So here's an ETF that's traded on the NASDAQ. It's iShares MSCI Peru ETF. EPU is the ticker. So here's the 1 year. So we see a falling real hard because of COVID, which pretty much every ETF fell behind that. And then over time, it's worked itself up out of that hole. Right now, we see the daily, it went red today because the news came out of that particular post. It was down 4% on the day. It's kind of came up a little bit in the aftermarket. Now, this ETF, you can't buy options on it, but you can short it. So for my really advanced traders, you can short this ETF. It's not extremely liquid, so it may be hard to find shares to borrow, but you can short it. OK, however, you don't have to short it if this is a brand new experience to you. What you want to start doing is training your brain to understand these type of scenarios. If this ETF sells off as a result of Mr. Castillo becoming president of the country, if you did short it, it will put you in a position to be profitable. So now, are you willing to take that risk as a short seller? Are you willing to borrow the shares, sell them against that particular price? Borrow the shares, sell them, pay the brokerage fees with the anticipation that this particular ETF is going to sell off in reaction to Mr. Castillo becoming president. Then we're going to buy shares back at a lower price. We're going to make our money on the middle. Right? Are you willing to say, hey, you know what? I think that Miss Fujimori is going to become president. So we're going to buy the ETF now because we believe that when she becomes president, the ETFs are going to run because the market is going to be very enthusiastic about it. And then therefore, we'll be able to make our money on the appreciation of the shares. Now, what you want to also look for is what are other companies that may do business in Peru that are tradable on the NASDAQ or any exchange that you may have access to, right? That are going to benefit from either candidate becoming elected or may suffer from either candidate becoming elected. Because that's all you should be concerned about. How do I make money from this situation? Right? Because, like I talked about the old me and the new me. The old me would say, hey, let me make a video so people can really understand that because somebody tells you they're a communist or they're a socialist or they're for the markets, that doesn't really mean anything by definition. Because let me give you an example. If a person tells you that I'm a thief and they steal from you, okay, they stole from you. If a person tells you I'm a socialist and they steal from you, Does it have anything to do with the fact that they steal from you have anything to do with the fact they're a socialist? If a person tells you I'm a Marxist and they steal from you, does the fact they stole from you have anything to do with them being a Marxist? If a person tells you I believe in free market capitalism, which is really an oxymoron, but if a person tells you I believe in free market capitalism and they steal from you, did the fact that they steal from you have anything to do with the fact that they believed in free market capitalism? Because what did all those people do? They all stole from you. So what I would do back in the day was I would try to create a video to try to get people to understand that. Not doing that anymore. The question is, how can you take this scenario and make money out of it? So based on how the market is going to react to this election, how do you make money off of it? And that's what we mean by event-based trading. There's events that are going on in the world. How do we capitalize on it? The market's perception of these events, the market's reaction to these events. How do we capitalize on it? And this is something that the mainstream probably is not going to talk about because it's going on in Peru, but you may have access to capitalize on this because of whatever brokerage you may be in, what part of the country that you may currently be in, or some of the relationships that you have with financial institutions that you may trade through. So this is what I want to start encouraging you how to see the world. And like I said before, is that if you read the article on Bloomberg, you don't see any of the hyperbolic, ad nauseum rhetoric about socialism being bad, yada, yada, yada. This is how the market reacted to this piece of information, because you may be able to use this information to make some money. You understand me? Because if you live in America, 9 times out of 10, what goes on in Peru is not going to affect your day-to-day life. And we're not saying that to disregard the lives of Peruvians, but that's just how it is. And we respect the right of Peruvians to elect whoever they want to be in position. How I feel about a person's political ideology don't have anything to do with the Peruvian election, because I would not want to impose my belief set on their ability to choose their elected representative. So this is going to be Market Mondays for 4/19/2020. This is David W. Williams. If you know somebody that can get value from it, share it out. If you have any questions, hit me up in the comments. Talk to you later.